friends, this is Link Technical Analysis, and do you know what? We did a really good public service yesterday on the show by telling people to be waresies of the crashes that could be incoming and explained all of the details that you would have needed to know in order to sort of play this thing as it stands currently. How good is that? Good enough to hit that subscribe button? I darn well bet you it is. If we look over here at the price action, there's a few things, of course, that we talk about regularly on the show. For instance, where the position of the 21 EMA is. If I just go ahead and hide all the drawings so as to not clutter up the chat here. Looking at the Link Bitcoin pairing, by the way, I'm Rocky Outcrop. Hit that subscribe button. I'll go over and link at the LINKUSD dollar pairing in a second, of course, as well as this one. But what we did was we dropped down below the 21 EMA, came back up, retested it, found that we were rejected on it, came back down again, and slammed down to the 50 EMA, the 55 EMA, and the 50 simple moving average there. Currently find ourselves actually being resisted by the 50 simple as we question about whether or not the 55 is also causing us a degree of resistance, and it looks to be doing so far. 135k is the current price in terms of satoshis, and what we had on the way up here was a good degree of bearish divergence leading into this decline in the prices. What did we call yesterday's episode? Something like avoiding the crash and helping people know how to avoid it. What were the prices at the time? Well, sure enough, they were up around about there, were they not? I believe somebody came along in the comments and said that they couldn't see it going below 16 bucks. They couldn't see it going below 16 bucks when the prices were up there. We talked about how we come in and hit our target of 20 bucks, which we did as well. So that's great. And then the prices sank on down. How lovely. This $20, this target of $20 having been the target during this upward move that we spoke about with everybody on the channel numerous times. Pats on backs for everybody who's a Rocky Outcroptician, because I know that what you do is you watch these episodes to help enhance your ability to be a self-reliant independent trader, because we don't do signals on the channel. Instead, what I am is a spirit guide towards you on your journey towards becoming that self-reliant independent trader that I know exists inside you, and you're well on the way to doing that, having hit that subscribe button and all that good jazz since you found this channel. Well done, you came to the right place, and I really do believe in all of you. If you want to join the Discord, then you'll get a lot more of that belief coming from me when I go in from time to time and say, hey guys, I believe in y'all. But also, what you'll notice is that everybody in there has a good ability, willingness, and right to express their own opinion, regardless and without fear or favor from anybody around at the time doing it, because we all understand that we're all independent traders, and that what we do here is give each other support along the way of that mission, not actually, prop each other up or bring each other down for just bullshit trading signal stuff, because that's what we're all about here. That's not what we do. So while I would like to give myself and everybody and every single one of you a pat on the back for yesterday's call when it came to the Chainlink and whatnot, really, it's always worth remembering that it's you guys out there, you guys and girls, that are doing the hard work. Let's just frame the context of this. If I put the moving averages back on here, or not the moving averages, the drawings back on here, and take this one that we've been using on the right hand side. Now, of course, subscribers know that this comes in from a reasonable place at the bottom to have done that from, and it comes in right here towards the top end of our price action. And we spoke about this in yesterday's video and all the rest of it, so I don't need to kind of draw this in again or show how it's constructed. But they know that is there, and you can see that this $15.59, $16 to sort of area, really kind of call it a zone if you like, closing below that is going to possibly be perceived as being fairly negative here, with the ability to open up this as a valid Fibonacci retracement, where you could have an ultimate target down there at $8.50. Go ahead and draw one of these on your own charts if you like while you're at it. What else did we talk about in yesterday's video? Well, did we go ahead and talk about how there was a rising wedge on the charts here, which could have a measured move, and where do we find the price action on this thing right now? Well, we did the full sort of measured move off the back of it, but we also came right down, and our body of this thing is right on where we drew that to yesterday. How lovely is that? Ties together really rather nicely. So what have we got on the go if we go down towards the low time frame, say the 1 hour, for instance? Well, the 1 hour is going to show us what can be conceivably a downward trend, right? Of course, because we've been trending down for the last numerous 1 hours, funnily enough, even though everything only really broke yesterday. Looking at this down here, we have a low, then we have a sort of high in this region, and a low, and then a high. And so we have lower lows and lower highs Cooly schmooly, bit of a downward trend. What do we have here then? Well, we have this bullish divergence, and it's across the board really on this one. So that's interesting, but it is just the hourly time frame and could therefore be a load of horse shit. Looking at this though as well on the 1 hour time frame, we are below the 200 simple. That's a negative thing. If we start to climb up above this, then I would say that things are looking more rosy. We'd be doing a couple of things at once, like for instance breaking these previous highs and putting in higher highs, etc., with the chance of turning this around. Key inflection areas have got to be laid out by those moving averages, but rather than name them for you, which you can check on your own, by the way, you can add this to your chart quite easily and get a series of moving averages, and the numbers which I use, which are always listed down below in the description of the videos, by the way, are 21, 55, 144, 233 on terms of the exponential moving averages, and of course 50 and 200 on the simples, and you can see the style of them up there on the screen for you as well, so I don't have to read it all out. By the way, as well, I am aware that I'm talking quickly, but there's a lot of people out there for whom that's a benefit, and there's a lot of people out there for whom it's not. Just put the video on at 0.75 speed. It's all good, by the way. You'll hear me fine. So yeah, cool. Looking at this, what we've come in so far, well, we came back up and retouched this median line of this channel. Now, what we were talking about yesterday as well was that I wasn't going to change the place of this parallel channel. I was going to leave it where it was and consider this to be a sort of pushing out beyond it at that point there as part of a rising wedge with the possibility of falling off towards the downside to be aware of. Elsewise, maybe we'd be moving towards the top side. Sure, cool. We spoke about all of that as well in terms of, you know, the upward side bonus targets, but of course, moving back down below it, we saw that actually operated in terms of offering up some resistance type targets for us, making it trading this thing fairly easy in terms of, you know, are we going to go up further, or is this the start of dropping off down the way? The wedge line itself here was perfect in terms of, you know, coming outside of it, retesting, and then capitulating all the way down. And where did we find ourselves right now? Well, below the median line on this thing. If we were to go towards the downside, that just puts in an easy target in and around about that $14 area, you know, and all of which is still very much in the healthy ground for people who were able to buy in. Say back when the prices were $4 and we were talking about it all back then, you know, back over here, back in all of this period when we've been doing daily technical analysis on this and all of the run up to everything, and all those people that benefited from that, you know, very easily, then if you're one of them, cool, you know, look at all this different patterns that we had and the playouts from it all on the way. It's all been really rather tasty. So hit that subscribe button. I'll jump back over to the Bitcoin pricing and just remind people then that if we do, you know, having moved outside of this parallel channel in a sense, you know, very much similar to what we were looking at before. And as well, I did tell people that there would be the chance of bearish divergence on this MACD if it were to become kind of wedgy, because that's how these things always go. And moving down the way then, you know, we came past the 236, yada yada. Top side target 145k, downside target 128k. Those two quite close, good enough for scalping. All the rest of it, broader targets got to be 115k, 90 or 100k area, 100 to 100, 105, 100 to 105. There we go again. Down to 80, the 86k area of the 786. Or indeed, if we were to come back down here, we'd be looking at all this previous price action we've had, you know, to give us areas on the way, and we'd have probably have seen something happen along the lines of a big old head and shoulders or something on the larger time frames or something there to kind of push to give us this, maybe not the 24 hour, but maybe to give us this downward price action. Now, what do we have here in the 24 hour time frame? Well, you could look at this last chunk here and say that it wasn't bearishly divergent. I would like to draw people's eye to the over here where we have this line showing the highs that we put in on the RSI and indeed on the stochastics, and you could imagine it with your mind's eye on the DMI as well. That then, of course, you can see that previous to this area in our 15th of July, that of course they were bearishly divergent amongst that. A little shout out to people who think, well, how can you be if you only got 14 on here? Well, that's looking at the previous 14 periods. So there's always some value in these episodes, by the way, to take away. So you can hit that subscribe button if you're getting some value out of this. For instance, that's looking at your previous 14 periods, which describes your it's an analog or a description of this move towards the top side that you've had, and then of course looking at the move that you had in the previous high, then you can compare that in terms of its move towards the top side versus the subsequent move towards the top side, as opposed to trying to find connections within the previous 14 bars along the way. Of course, that's what you can do. If you want to know more about it, then go ahead and read New Concepts and Technical Trading Systems by Joelis Wilderger, which we talked about the other day in another video. Cool. Cool beans. Let's go to dollars. 236, 15, 12, 10, 850, like we spoke about already. 1050, 1287 would be those ones, and 1559 really in terms of that, where we have the bottom end of this channel coming in between those two zones, really depending on the time wise, if you were to see this moving towards the downside. But bearing in mind that if we see this get sort of supported by the edge of the bullish control zone, which I have there, which is custom to how I draw this thing in at, rather than using Chandler or whatever you call her targets there, where she calls it 60 or something, 60, and I got it coming in from 65 on this one. Then of course you can find that you can, if we get supported here, and I've got it set to this as being crypto, I find this is a better inflection line on it than others, as you can see there quite clearly, I think demonstrated on this 24-hour crypto Chainlink chart versus the dollar. So yeah, we could maybe find support here, move towards the top side. That would be your sort of initial gains. Good side, good moves, perhaps moving back up above the median line of this channel, having found support above the 236, offering in a decent buying opportunity for people who indeed, like the commenter said below in the chat recently, are looking for it to go up towards 25. Nothing goes up in a straight line. How does 25 come in at on this channel? It comes in over there. If we were to do $25 on the 1st of September, nothing really would have changed overall, and you can see that. So you do have a good few ideas about where you'd be going past, and if we did go past that $12 area and go down to the 618 at $8.50, well, of course you could remain bullish on this asset at that point in time. I would like to point out that would be, of course, very bearish in and of itself, because over here, take off all this here and draw this in, you'd be looking at this previous high over here at that 850 area, and of course you're asking different questions when you come back down past the previous price action, having been in a price discovery mode, so to speak. By the way, for people who are interested, if you're interested in another piece of value, price discovery mode is what is always happening. It's constantly happening with the prices. They're always in price discovery mode regardless of where you are in relation to your all-time highs. However, people like to talk about it on the YouTubes and stuff, that price discovery mode is what happens when you're in the all-time high zone. But specific, but doesn't matter though. Doesn't matter. Just so that you know that you're keeping. Who cares, right? Who cares? But you maybe one day you'd be in some stuffy room somewhere, and someone would try and pick you up on what you're saying, and you would say, I knew that. Why are you such an ass? Why are you such an ass? Like, why? We don't need that. That's what your response would be, by the way. Cool. You're cool, by the way. I really appreciate you tuning in for this episode. Hit that subscribe button, hit that like button. I'll catch you next time. That's been today's episode for Link. Yes, a lot of it was talking about what happened in the previous episode. Sure it was, but we actually went through quite a bit of targets there, really hidden in amongst the chat. And of course, tips for you on how to look at things yourself with regards to the moving averages on the lower time frames and where we could be in amongst all of them. On the 4 hours and stuff like that, the shapes of things, the trend action on the lower times as well. And things like, actually one last thing I didn't point out is that you could have a big old dose of hidden bullish divergence come in here if that was to be a bottom. So there you go, there's your bullish sort of balance to everything that I've said. If this were to move towards the top side, then very rapidly people would look at this as being hidden bullish divergence. Expect, if it does go up, to see that on crypto Twitter in about 3 or 4 days time, because everybody's slower than us. Catch you next time.